news for consumers. Well, it's slightly bad news, let's be honest. Inflation increasing to 7% in February from 6.9% in January. So we're just talking about a 0.1% difference, but it does affect your bottom line. Stats SA releasing the latest numbers yesterday. The data will be used by the MPC, the Monetary Policy Committee, to decide on interest rates next week. You see, now I got your attention. We talk about interest rates. We'll get there. Well, we'll get there. Let's make sense of why this is important for us today, though, joined by economist Professor Bonke Dumisa, always very kind with his time. Hello to you, Prof. Good to have you back on the show with us. We'll get to what it means for consumers in a second, but tell me why consumer inflation's gone up by 0.1%. Doesn't sound like a lot, but it has gone up. Why is that? Good morning.
Good morning. It doesn't sound like a lot, moving from 6.9 to 7%. But what is more significant about this is many of us were telling us that the consumer price index, the CPI, normally called the inflation, was on a downward trend, because you remember that it was once at 7.8%, it moved to 7.6, 7.4, and then it went to 6.9. All of a sudden, it has gone up to 7%. There's a psychological impact there, because when the CPI was going down, we could justify the repo rate slight increases instead of aggressive increases. And now we have got a very extra cautious, and I'm saying this thing in a very honest way, we've got a very extra cautious South African Reserve Bank Monetary Policy Committee. And it takes its cue from the US many times. The United States Federal Bank increased their repo rate, their federal interest rate, by 25 basis points last night. In South Africa, the last time the Monetary Policy Committee increased their repo rate, they increased it by 25 basis points, but it was 3 members voting for 25 basis points. 2 of them actually wanted a 50 basis points increase. So with our MPC being extra cautious like that, we do expect then that the South African Reserve Bank's Monetary Policy Committee will increase their repo rate by 50 basis points. That's the major impact of this CPI, which may sound like, well, it's not so bad. It's only 0.1% higher than the last time. So we must be very uncomfortable about this, but it is unavoidable. You asked the question, what are the implications for the consumers? When we're talking about the repo rate, we're talking about the repurchase rate. That's the interest rate that the banks pay to the Reserve Bank to be given loans from the Reserve Bank. And then for the banks to make their profit and their money from that, they increase that by 3.5% to arrive at what we commonly know as the prime overdraft lending rate. So which means if ever the repo rate can increase by 50 basis points to 7.5%, it means the prime overdraft rate, which many people use, then it means it will go to 11%. That's very inflationary, and that is going to hit the pockets of people who are still paying for bonds. And the majority of people in South Africa are younger, so they're still paying for their home loans. And for those who have the flexible interest rates on their car installments, that will go up. And businesses, because the cost of doing business is going to go up, then they will push the prices forward to the consumers. So this may actually feed into more inflation rate rather than capping it. And that's why and when I say we, all of us are consumers. We consumers must be very uncomfortable about this, but you must not shoot the messenger. We must not be angry with the South African Reserve Bank when it does that next week when they meet from the 25th, 28th to the 30th of March.
Well, this
And
is why
what
I
is
wanted
more
to talk to
troubling
you,
is
Prof, is because you were able to make sense for me as to why the 0.1% is going to affect interest rates. I knew when I spoke about it in my intro, the moment I said interest rates, that's going to get everyone's attention. I want to ask you this, because I feel like you were about to give me even more bad news. Tell me why this could get even worse.
the reason why I'm saying this may actually even get worse, it is because whilst we're talking about the CPI at 7%, the food and non-alcoholic beverages inflation rose up to 13.6%. And you must remember that inflation, the CPI, is an average figure. It actually hits harder with the lower income groups because with the basket of goods which is used to calculate the inflation, there are higher weights which are given to the products that the basic products that most people use. So when the inflation rate for food is at 13.6%, it means any increase in the bonds, the bond installments or car installments, is going to really hit harder than what we think in terms of averages. That is what is worrying me. Remember that the trade unions, public sector trade unions and other trade unions, the reason why they were pushing so hard for increased salaries, double-digit salaries, they were
10%, yeah, I
saying
remember.
they cannot bear the rising cost of living.
And just briefly, Prof, before I say goodbye to you, you've spelled out very nicely the effect it's going to have on our pockets. We know that there's going to be an increase in electricity. We're waiting to see what's going to happen with the fuel price come April. I'm seeing expectations, petrol price up, diesel price down, but we'll talk to Leighton Beard about that. I want to ask you this in closing, Prof. So not good news right now with SARB next week and the MPC. Do you suspect it's going to come down after this, or could we be hit again later in the year with it going up?
We're looking at the trend of the international Brent crude oil prices, which the international Brent crude oil prices are currently trading at far below $80 per barrel, which is something that last happened long time ago. So if ever that trend continues, as you have already said, we are likely to see the diesel prices going down, and we are likely to see a slight increase of the petrol price, or even a slight decrease of the petrol price. Then those are some of the things that feed into the high food cost prices and the other essential goods. So if ever the prices of petrol go down, that may help to bring back and control the rise in inflation, because we really want to see it back within the 3 to 6% South African Reserve Bank's target inflation rate range.
Yeah, and right now I'm afraid we're exactly 1% over that, which is not where we want to be. Professor Dumisa, always lovely to have you on the show. I appreciate your time, always willing to make time to explain to someone like me exactly why this is important. So yes, just 0.1% up for consumer inflation. But as the Prof says, what you've got to watch for, all of us consumers, is the interest rate next week.